All right, so yeah. Okay, one more. Okay, so yeah, this is MetaTrader 4, just a basic, simple template. What I'm using right now, just naked candlesticks. They got some of the market data up here in the top right, and I got the RSI below. It's color coded for bullish and bearish activity. Of course, above the 50, it's going to be green for the bulls. Above the below the 48 in the 50, it's going to be white for bearish. So if you look here, you can see those color coordinators on the RSI down at the bottom. Of course, to the right, we got the pip count. Currently right here on the Aussie USD, we're at 0.72902. And this is approximately where I've entered. My trade is currently 1 pip in profit. Seeking at least 50 pips on each individual trade. I'm using a very small account, but the data is going to be recorded throughout the whole boot camp. So I'm going to be demonstrating risk management as well as technical analysis throughout this entire process. Let's go ahead and begin a simple top-down analysis here on the Aussie USD to bring you to find exactly why I entered this position here today on the Aussie USD. So just zoomed out, looking at the entire roadmap here on the Aussie USD monthly chart. Of course, when you do your top-down analysis, you always want to start at your highest time frame to see the big picture first as you zoom into your key trigger levels. Again, the key trigger levels are going to be the hour time frame and below. Here, from this perspective, looking at the Aussie USD at the monthly with these period separators, which are simply toggled on and off by Control Y. On the monthly time frame, they separate 12 candles each, which of course indicates a full entire year. So with that being said, we're looking at about 11 years worth of data right here on the Aussie USD, all the way back from 2008 to 2021. So really about 13 years here worth of data. And we're gonna start with first identifying swing highs and swing lows that we can identify here on the monthly chart. So just starting, you always want to start from left to right. So left to right, of course, being the right being the most real-time, up-to-date price. So just starting off looking at the swing positions here on the monthly, we're going to start off by indicating the lowest point to the left, which is down here at 0.47 cents. From there, following the swing and the trend with this series of higher highs and higher lows, the first series of lower lows would be here, so which would indicate that the trend ended right here at 0.80 cents and 2/1000th of a penny. All right, and from that swing brings us down into here, which is 0.67, 0.67727. From there, we can see how trend moves up to this new level. Here, that level peaked out at 0.98. So now we have potentially an ABCD pattern. This is past tense. So of course, first you want to do the data from the past in order to accurately analyze price in real time. So that's what I'm doing here now. And off of this swing low to the swing high, you see we have a bounce here at the 38. But this original bounce was actually here at the 23. Of course, the 23 on the Fibonacci is an indication for a continuation, which brought us to our expansion swing low, swing high, down to the retracement. Brought us up here to our expansions at the 100, which brought us up to $1.04, and the 61.8, which is at 91.5. From there, as we see it drop down again, this is somewhat of a harmonic pattern. I'll draw it out for you so you guys can kind of see it. From here, as you see, we swung back up and created a new high at that 104 level. From there, we came back down here to the 67 level. From there, we bumped back up to a previous resistance level at 0.80. From there, bounced back down, created a new low here at 54, just to be exact. We'll drop it right at the bottom of that wick, which is at 54.8. From there, came back up, retested 80.2. And now from here, we have a solid resistance level. I'm just doing the top-down analysis starting here on the monthly time frame. That brings us into our key trigger levels, which is down. Again, the key trigger levels are the hour and below. Hour and below time frames take us into the key trigger levels. So just for the record, right now I am in a sell position on Aussie USD. I'm also in a sell position on pound USD. I'm also in a buy position on USD CAD. I don't have much risk. I only dropped 2 pennies. Well, with all these three, I dropped a penny on each of these positions. Over the course of this 30 days, we're going to grow these accounts. So the risk is moderate, but steady growth. It will be consistent. But again, I am in a short on Aussie USD, a short on pound USD, and I am long on USD CAD. And what we're doing now is we're reviewing those positions and why I entered. So just going back to where I'm at now, I'm doing a top-down analysis on the monthly time frame on the Aussie that will bring us to our trigger levels at the hour time frame and below. So going from here, really on the monthly time frame, now that we've done this top-down analysis, there's nothing really else we could do here for the monthly time frame. So we would just simply go down here to the weekly. Down here in the weekly, you can kind of get your levels and indicator a little more accurate. Just pretty much just editing what you've already drawn based on what you saw on the monthly. So now we'll simply do the same thing, but now we don't have to use the bigger picture. We can just use the data that we've analyzed and presented to ourselves from the monthly time frame. Again, this is a top-down analysis on Aussie USD. So from here, now we know we had a swing here from swing high to swing low. We're back here at this position. In this situation, we can pull out our Fibonacci and utilize this swing. Swing high to swing low. As you see, we had a retest back up here to the 100. So this situation here is now a double top, but notice how the second high is lower than the original high. So this is considered a lower high. Lower high. This low did not breach the original one. And in a trend, we know a trend is formulated by a series of lower lows and lower highs. So that's exactly what we're getting here. We have a high, low, lower high. So the next anticipated move would be a lower low down in this direction. And of course, that would present, that would present a channel. We pull out the channel indicator. we will be presenting or creating a trend channel with this projected next swing low down in this area, which will look like this. Because again, what we're looking for now that we do have a lower low, excuse me, a lower high, now we would anticipate another lower low coming to complete and confirm this downtrend that we've already projected from looking here at the monthly. Here's the monthly. These are the same markups I'm drawing, they just look different on different time frames. But here, back at the weekly, we would now be seeking a swing low, a lower low. So again, once you're done with each time frame, you would simply move down to the next one. Now we would be at the daily. As we get into lower time frames, of course, we get closer and closer to our trigger zones. Our trigger zones are where we actually pull the trigger. And again, the trigger zones are at the hour time frame and below. Are there any questions so far? I'll pause for a minute. Are there any questions so far on anything that I've done on this top-down analysis so far on this Aussie USD? All right, good deal. I take that as a no. All right, so now here on the daily time frame, we're still going to utilize what we've already marked up here on the higher time frames. I can actually get rid of this Fibonacci. There's no need for it anymore. Now, going in here, just moving that point to make it a little more accurate. All right, now getting in here at the daily, we're still going to utilize the fact that we do know we're in a downtrend, projecting a downtrend right in here. So we're going to follow that trend here now on the daily. We have a swing high, swing low. Here's the swing low. We're going to use this particular swing now to analyze. We know we're projecting in a downtrend, so we're going to use this particular swing here off the daily to put us back in line with the swing on the higher time frame. So let's go in here. We'll zoom in a little bit. So now we're going to utilize this data. Of course, right off the bat right here, we can see this consolidation. Consolidation is simply, of course, sideways movement, which we can see here by this swing low being created, this swing high being created, this low, this high. We can see this data bunched up right here. So if we actually take this consolidation area and pull it all the way to the left, we're currently at the bottom of that range in real time right now, over here to the right. Real time, we're over here bumping this particular range from the bottom. So we know if this level was at one point support here, if this level was at one point support here, and then it was broken here, support, broken, this level now becomes resistance. Broken here becomes support. Broken here, now it's resistance again. All right, so this level here is now a resistance level. As we can see, prices coming from beneath, so we know it's a good opportunity and a good confirmation for this level being a resistance level. So moving this on across over this way, we can now see how I've got the projection or even the analysis for this area to be considered a resistance zone. So now with that identified, we can now move down into our hour time frame or 4-hour time frame, which gets us closer to our trigger level. And now you're starting to identify exactly why I pulled the trigger, where I pulled the trigger. If you notice where my position is right now, it's at the peak of the day, high of the day. Once we get down into the trigger zones, that's when you're able to identify, you start to identify and confirm what session you're in, what time of the day it is, and what currency pair it is. Remember, this strategy and these chart reading methods are based on pure pattern and price action. So it really doesn't matter what asset or instrument you use. In the mornings, whenever I get up, I really don't care what charts on my screen. I just analyze it, see if there's an opportunity. If there's not, I go to the next one. The only time I pay attention to what actual asset I'm actually trading or analyzing at the time is when I'm actually down to my trigger zones and I'm going to pull the trigger and maximize my risk. Of course, different currencies have different spreads, so you want to make sure you pay attention to what currency you're trading and the lot size you are using on that particular pair. Some of these currency pairs can do extensive damage, while other pairs will do moderate damage using the same amount of risk. So you really have to get familiar with the spreads. Aussie USD being one of the lightest pairs on your account. So Aussie is a good one to start practicing and training with for you new guys out there. So now again, we're here at the 4-hour chart. Again, off the daily, we analyze that this level here that we're currently at in real time is a resistance level. So here at the 4-hour, as you see, we're being that level is being resisted and attempted and tested at the current moment. This particular 4-hour candle that we're looking at closes in about 30 minutes. So I would like to believe that the momentum here is dying out, and this level here will hold as some resistance, but we'll be able to identify that a little more, and I'll point that out to you on the trigger zones once we get down in there. But going back to this 4-hour chart, as you see, we're in the resistance area based on what we drew up on the monthly, daily, and weekly. We're at a resistance level. The points and the key levels all match up, so there's really not too much data we need to analyze here off the 4-hour. The work was already done on the higher time frames. Now we're going to go down into our hour, and we're now entering our trigger levels. Trigger levels are, again, where you want to enter are the time frames 1 hour and below, where you're actually going to want to execute those positions. Looking here at the hour, being that we're down in the key trigger levels, if you now pay attention to the RSI, you can begin to see some divergence. Divergence is simply a, what's the word I want to use? A difference or a disagreement in price action and the oscillator. The oscillator is the RSI down here at the bottom that's indicated by green and white. That is an oscillator that identifies trend, strength, or momentum. And if you look here, we have lower highs being formed here on the momentum indicator, whereas over here on price action, we've got a higher high. That is an indication of divergence, which is also an indication of a reversal, trend reversal potential. So we have divergence here in our trigger zone, as well as a trend potential reversal. And now when it comes to our intraday rules, which we apply on the hour time frame and below, if you notice here, we are above the previous day's high. Again, all I do to make sure I have a straight line, copy the first value, paste it in the second value, and you have a successful straight line drawn by a trend line. Now, with this being said, we are now in a trigger level. We are at a resistance level on the higher time frames. Down here on the 1 hour chart, we have exceeded the previous day's high. So with that being said, the previous day's high or previous day's low, if you get a trigger level and those positions have already been breached, 9 times out of 10, you can take the trade in the opposite direction. There will be times when that particular setup is a expansion, as in price will not only breach the previous day's high or low, but continue going, continue in that same direction. But if this, in this situation, if you look at the RSI, the divergence is not going to allow that to happen. Here with this divergence, what this is showing is a reversal here at the high of the day. Then if you take in mind what time of day it is, it's coming up on 8:45, which is the beginning of the New York session, which tends to throw reversals in the market. So it's 8:30, we're in our trigger level, we're at resistance, we breached yesterday's high, and we have divergence on the trigger zone time frame, which is the hour. So now what I'm going to do is I'm going to go to the 30-minute. Now here on the 30-minute, again, we are in that trigger zone here off the 30-minute time frame. We breached yesterday's high and we're starting to settle for a reversal. If you pay attention to the RSI again, we are up here at 70, which is one of the max levels, oversold or overbought level indication here on the RSI down below. So now we get down into the 15-minute. Here on the 15-minute, again, we are in a resistance level. We are in a key trigger zone. We are on the 15-minute time frame now, and we're at the high of the day, and we're at the New York session. And here is why I entered my position here. If you look here, this is a particular doji in that particular key trigger level zone that we have identified at the high of the day. This is exactly why I enter at the high and low of the day. If I'm done with my analysis, by the time I get down to the trigger zone, if I'm not at the high or low of the day currently, before I pull the trigger, I don't tend to take that position, because if you're at the high of the day will likely be just that, the highest point of the day. So your risk is minimal and you don't too much have to worry about price going against you. As you see here, with price being at its peak, I don't have to worry too much about my stop loss even being close to being broken, because I'm at a peak position here on the high of the day. So that is exactly why I've pulled the trigger here on Aussie USD. Now, since I am entered at the high of the day, my target would simply be, now we can pull out our Fibonacci and utilize the swings we have here on the intraday time frame. So looking here, we want to now count the trend, pay attention to the trend that's here on the intraday position. We can start it here at this previous swing peak low. Now, if we follow it, we have a resistance here. So what I see here is an A, B, B to C, C to D situation, and that is found by the Fibonacci, swing high to swing low. Here, the bounce comes at the 61.8. The expansion would be the next swing high, which is here at the 161. If I drag that across, that brings me to identifying this support level. Now I can take this Fibonacci off, it's good and complete. Again, that is this swing support level here. Now, of course, I had we got a retrace back down into that level. And then as we see, price broke out here. Now this right here is somewhat of a range. Also identified due to the fact that we're on this hour time frame, this would also be identified as the Asian range, which is the first 8 hours of the day. So here we got the Asian range. Here we have the London session low. And the reason I've identified this area as the London session low is because the London session is the first session outside of the Asian range, which is here. Then now, of course, we're coming into the New York session, and the New York session high will likely be set right in here where I've entered. And then we would likely see price come back down here and retest this ultimately retest this support level here. Now, how do I know that? I'm about to show you exactly how I know that. Of course, it gets easier over time. Over time, you'll start to be able to eyeball this stuff, I promise you, like the back of your hand. So with that price breaking out here, let's utilize this swing position here from the Asian range high to the London session low. So I'll actually leave that there. And we'll do that again with the Fibonacci. You can pull the Fibonacci anytime you can connect 2-point swing to high to low. Swing high to swing low. I'm gonna change the color. I know we got a lot of yellow on there. So let's make this a little too. All right, so here off this particular swing high to swing low from the Asian session high to the London session low, we have a retrace. Retrace came up in here to the 100. So it's right in here. Well, actually, all that with this. From here, we can take our Fibonacci, and now, presuming that this level here is in fact the New York session high, we can now pull out our Fibonacci again from swing low to swing high. Fibonacci, swing low to swing high, which now brings us back towards the low of the day as an entry position. And this level ultimately will, as you see down below, here's a target. Here's the level that we drew, but according to the Fibonacci, the target would actually be a little lower. So right in there where I drew this previous red line, target down in that zone. Target 2 would be there. Target 1 would be this 161. Drag that all the way across, it brings us here. So now I have my intraday targets. I've done my higher time frame analysis, and I'm in my entry trigger zone, which is where I pulled the trigger here. So now from this point on, with this being the New York session high, presumably, we shall be decreasing in value from here to our lower point targets. Since the high is already set, is being set currently, from this point on here, where I've entered, we'll likely begin to see price fall and not return. That is ultimately exactly why I've entered this position on Aussie USD. And that's all the work we have to do. Now we just sit back and watch the pips count up. Any questions about this Aussie USD analysis? I'm complete. I'm about to move on to the pound and USD CAD. Let me know if there's any questions about anything I just went over here on this Aussie USD. I'm about to move on to the USD CAD. And I've also got a couple of crypto trades that I'm gonna go over as well. Let me check on this real quick. Let me know if there's any questions before I go on to the USD CAD and the pound. Okay, good deal. Now let's go over, and now we're gonna jump on the CAD. I entered that position as well about, I would say about 30, maybe 45 minutes ago. I entered about 8 o'clock, right on the dot is when I actually pulled the trigger here on the USD CAD. And going over there to the USD CAD brings us right in here. Here's the USD CAD. So now let's break this guy down. Moni, is Simone on? Let's see. Hey, Simone, did you take that gold sell? I just looked at it and it definitely fell off from the one-on-one we had yesterday. Once you've done your top-down analysis, you'll buy and sell once you've entered your trigger zones, such as a position that has breached the previous day's high or low, such as this Aussie USD. The movement here on the New York session really is good and going by 9:30, no later than 10 o'clock. So whenever I enter a position, I typically will hold it at that high or low level for at least 30 to 90 minutes is typically the traditional time frame that they hold the high and low levels. So now that I've entered here at the high, presumably they should move away within the next 60 minutes. So by 9:15, we should be good and going from this position by 9 o'clock, 9:15, within the next 15, 20 minutes. I've already been in this position for about 30 minutes. So based on my time clock, they should be moved from this level within the next 60. So that'll give us a total of 90 minutes. Typically, if they don't move and they're still consolidated, they're gonna continue to push higher. But we'll be able to determine that within the next 15, 20 minutes. And based on this particular 5-minute candle that I'm looking at right now, these next 15 minutes here on the Aussie USD should start to crumble based on the RSI as well, which we're looking at here. We should begin to see this type of movement. We'll come back and check on it in just a minute as I go through the USD CAD. But we should be on our way right here. And as you see, that's the bottom of the Asian range and the London session. So once we breach that, we'll be in the clear to head down here to the 7.9 situation. All right, let me go back over to UCAD. Okay, now here on UCAD, same thing. Again, we'll do the top-down analysis starting here on the monthly. So zoomed out here on the monthly, here on UCAD, we'll start from left to right. Left to right, the peak is going to be, well, we actually can start here at this low swing. So here's a level, which is the lowest point before price turned around. Here's a swing high. And again, I'm following it in this direction. Swing low to swing high. Now, pulling out the Fibonacci, you can pull it out at this point, but there's really no need to actually utilize it. But if we did want to pull it out, we could simply trace this swing low to swing high and see how these levels begin to play out in this in this fashion across the board, starting with this first original swing. We can see how price broke the 100 right in here. You don't have to use the Fibonacci just yet, but you can, just to confirm some of your situations are accurate. As you see, this particular level held throughout throughout the last 20 years. This particular level here has held for the past 20 years. If we come and remove that Fibonacci, because we don't necessarily need it right now. So now we're gonna pull the swing, and from this point, we swung all the way down here. Swing low. From here, we swung back up, brought us here. From here, we swung back down to here. And what I'm looking at is I'm just ultimately looking at price as it changes direction. Peak positions before price changes direction. One, swing high, swing low, swing high to the swing low to a swing high to a swing low, back up here to a swing high. Notice how this high failed to breach previous low, which gives this level here a solid structure and solid confirmation as resistance. We swing back down here, creates a new support level, swings back up here, creates a double top at that resistance level, swings back down here, creates a double bottom at this support level, which now creates a range. So now we're in a range here. And now, as you see, we're done with the monthly time frame. Now we move on to the weekly. Here in the weekly, we have those same positions. As you see the range, you can see the range a little clearer, clean as day. Now I'm just going to make these points a little more accurate. All right, now from here, we would then simply move and look at the fact that we're in a range, here being the bottom of the range. So in this situation, we would assume that price is heading back up this way. Now we would zoom in and take a look at the trend in line with this current swing that we can predict here. So zooming in, and now we're just going to work with this particular area here. We got a swing low being here. Now, looking at the trend, of course, we know the trend is identified or created and established by a series of higher highs and higher lows. So if we have this being the ultimate low, or the peak low, the trough, we have a higher low, higher high, higher low. Then we have higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, ending here at this position, at this higher low, or this higher high, excuse me. The market is all about higher highs and higher lows, lower lows and lower highs. So from this point, we can now pull out our Fibonacci, swing low to swing high here. It's almost like magic. Watch what happens when what I do next with this Fibonacci. If I pull the Fibonacci from this swing low to swing high, As you see now, we're bouncing on the 23. Now, assuming we are all familiar with the Fibonacci, price bouncing at the 23 would presume a continuation to the upside and continue and confirm an ABCD pattern. Again, ABCD pattern is simply point A, point B, point C. And you might ask, well, how do I find point D? Once you have an ABC, you pull out your expansion, your Fibonacci expansion. And from there, you go from swing low to swing high back to point C. Swing low, swing high, bring that back to point C. And you can actually see how price actually comes to the 38 from this swing, or even the 50 right here. So just to be clear, and let me redraw that, we have just to be clear and draw that a little more clear for you guys, here's the ABCD pattern. Now, ABCD pattern is the beginning of a harmonic. ABC, how do I know D? Because I use my extension A to B to C. D is the extension of those 3 points, which brings us up into the Fibonacci expansion of 161 here. Let me know if that so far makes sense for you guys, this ABCD off the weekly. Any questions about any questions about the ABCD pattern here and how I found it? All right, good deal. Now, also, now we can just really look at the fact that if this is an ABCD pattern and we're bouncing off the 23 and the current weekly is currently bearish, then this is obviously, there's an obvious 90% chance that this right here forming right now is the low of the week here on the USD CAD. That is one of the reasons why I pulled the trigger. But again, we'll start to see clearer why I pulled the trigger. Yeah. And okay, so now with this level being presumed as the low of the week, this is another reason why I've entered a position here. All right, so just to clear that ABC drawing off. Now let's move into a lower time frame. Again, our work is done. As you move down from the monthly time frame, it'll get easier and easier and start pointing right at you. Now we're at the daily. Here's the ABCD pattern. Here's the low of the day. Now we're going to start with really here now, as you can see, the daily markup is pretty much done based on the markups we've done on the higher time frame. So there's really not much we have to apply here on this particular time frame now. Now we can go straight into the 4 hour. Here, looking at the 4 hour, this is the data we see now. We can see how we're at the low. The new 4 hour just opened at 9 o'clock, 6 o'clock on the dot, literally 60 seconds ago. So now from here, we can go into the 1 hour. Now we're entering our trigger zones. Now we are entering our trigger zones. Remember, 1 hour and below are the trigger zones. So now we apply our intraday rules based on the markups that we've already done. Intraday rules are as follows. Have we broke the previous day's low? Yes, the previous day's low is here. Here's the previous day's low. All right. So have we breached the previous day's low? Yes. Now, here's the Asian range. Again, it's going to be the first 8 hours. All right. Asian range. London session low. Now we're entering the New York session. So it's only presumed or anticipated that now we're coming to this area. I'm actually going to move my stop just down about 3 pips below the current low of the day, just so I'm in the safe. Now, my stop is, once I've entered and I've analyzed that I'm in an entry zone or entry level, key trigger level, my stop is either A, below the previous day's low, or B, below the current day's low. My stop in this situation is below the current day's low. All right, that makes sense? The stop goes either below the previous day's low or the current day's low. Obviously, it would make no sense for me just to put it below the previous day's low, because the previous day's low is above my entry. So the only obvious place to put my stop loss with my entry here is below the current day's low. All that makes sense? Right. With this stop being in here, my stop is literally what, 15 pips. 15 pips. And when you enter at the highs and lows of the days, you have the opportunity to make your stop as tight as 5 pips, 10 pips. A lot of people, you know, they want a 50 pip stop. I'm like, hell no, we're gonna put a 10 pip stop and let this bitch ride. We're not worried about losing no 50 pips, because we're not even gonna give the market a chance to take no 50 pips. 10 pip, 15 pip max, are we gonna give the market an opportunity to even take from us? And that's done by taking proper positions at the higher low in the right trigger zone. So now, with this presumably being the low of the New York session, we know New York session starting right now, 9 o'clock. We just got a new 4-hour candle. So now from here, we go down to our 30-minute. So now here, looking at the 30-minute, let's go ahead and utilize this Asian range, swing low to swing high. We'll take the Fibonacci, swing low to swing high, come down in here, and we can see how this particular level would have been the low structured here at the 161.8. So now we can take our Fibonacci and now pull it from the high of the day to the low of the day in real time. Now we have expansions. Of course, my particular target one was eyeballed at this 161. But now that we've done our top-down analysis, we can easily see that it's likely to come back up here, breach yesterday's high, and take us on into the 261 or even potentially the 423. And looking at the 423, if we zoom back out to the daily, this is where that potentially would take us back up in here to this level. All right, so now let's go back to the 30. Here we're getting a solid formation of the swing of the low of the day. We can come in here to the 15. Here at the 15, we can see it again. We can see that bounce here at the 100, at the 0. You can see my stop right here at the low of the day. I can actually put it right here below this little zone. And that's still about a 15 to 20 pip stop right here. Now from here, we know we're coming into the New York session. So with a New York reversal in mind, we could likely see price jump from here, from this low, to set a new daily high, all within the next hour. So over the next hour, we should see this potential movement here off the USD CAD up and take us to profit, take us on in. Any questions about this USD CAD breakdown? Now our entries are in, our stops are placed, and our TPs are set. Nothing else for us to do here on the USD CAD. Now I'm gonna go back over and take a look at what Aussie's got going on. It depends on the structure. As you see right here, there was no London session reversal. The USD CAD is a USD pair, so it won't really make any reversal in London because there's no transactions in the Canadian dollar being done during London. Got to pay attention to what session you're in, what pair you're trading. So it depends. London session reversal will typically cause a reversal on London pairs, not a USD pair. All right, so now we can go into the 5-minute if you want to get even closer and identify the pattern that's starting to form here. Again, take a look at the RSI right here. There's a slight level of divergence. Lower lows, this is higher. And this is likely where we'll start to see the turn. We should see the turnover in the next minutes. You know, USD CAD, like I said yesterday on some of my one-on-ones, USD CAD likes to wait until 9:30, 10 o'clock to move. If you look at the time, it's 9:07, almost 9:30 and 10 o'clock, and USD CAD is about to move. All right, hope that makes sense. Now we'll go over and take a look at the pound USD. I entered there a couple hours ago. Let's go over there to pound USD. So just to recap so far, I got a short position on Aussie USD and a long position on USD CAD. Just a recap of what we currently got going on. That's a long on USD CAD and a short on long on USD CAD and a short on Aussie USD. All right, so now give me just a moment here. I'm taking a look at some. Let's go ahead. This is the pound USD here, and we'll get started on this markup here. Give me about 5 minutes. I'll be right back. Let me know if there's any questions in the meantime. If you have any questions in the meantime, type it right here. But now we're getting ready to dive into USD CAD. Pound USD. We've done USD CAD, and we've done Aussie USD. All right, now to resume back on the pound USD. Let me see YouTube. All right, so now starting the analysis here on the pound USD. We are going to start here on the monthly, of course. Zoomed out here on the monthly. Go ahead and zoom out so you can see a good amount of data. Now we'll do the same thing we've done as on the previous pairs. Here we identify the first swing low here. We go back a little bit, there's a swing high here. That swing is identified here. Then, of course, from that swing position, we moved up to here. From this swing position, we fell back down to here. From this swing position, we went back up to here. From this swing position, we come back down here. This here, right off the back, I can see was a harmonic pattern. All right, so now from here, we swung back up to here. From here, we swung down to here. From here, we swung back up to here. From here, we swung down to here, creating a double bottom or a supportive level. Here with these two highs, now you can see we're in a range. Here's the range. Here's the range. Everybody see the range? Let me get a thumbs up if you guys can see this range that I just mapped out and understand why this is a range, in fact. Can everybody see why I've identified this area as a ranging area? All right, so now there's just by identifying this ranging area, we can see that price is obviously at the top of this range. Top of the range, if we're in a range, from the top of the range, you go to the bottom of the range. It's a range simply because of these highs and lows being in the same place. As far as what I mean by that is this high here or this low here, this high here, this low here, and this high here. So it's a range. All right, that's what identifies this area as a range. Multiple highs and lows at the same level. Back and forth, back and forth. It's boxed in. The next breakout, in my opinion, is going to be down to the downside. So we've got all this room here to profit from 36.8 all the way down to 30 flat, 13 flat, which is about honestly on the monthly time frame here, that's about 15,000 pips. All right, so moving on here, we've identified the range, so we know at the top of the range. Now, of course, now that we've done this analysis, we can now move down to the weekly. Now we can level out and get our swings a little more accurate. All right, now we know we're at the top of the range, so we're honestly presuming that we're coming back to the down range here, so we can go ahead and assume that we're in a downtrend, so we're analyzing that favor. Utilizing this data, as you can see on this swing high, we have a peak position here that's created here. And if you look at where we're at now in real time, we're at the top of that. We're bouncing out that with leaving wicks down in there. We'll likely come fill this wick, and this pound USD will likely begin in this fashion. All right. So now we'll go into the daily. Here on the daily, inside of our zone, as you see, we've breached this supportive level that was identified by this consolidation, this low, this low. We know this was a supportive level here. It's been broken. I'll indicate where it's been broken. It was support all the way up to here. It was broken here. So now this level is resistance. All right, this level is resistance now. From here, we go into the 4 hour. Here's the 4 hour. Now here off this 4 hour, if we look to the left at this particular swing low right over here, which is the resistance or support, resistance broke or support broke becomes resistance all the way across the board. So now we know we're at a resistance level. Here off the 4 hour chart, we're at the top, at the very peak of this resistance level. Now we can move down to the hour. Now that we're in the hour, we know we are in where? We are in our trigger zone. Trigger zones, hour and below, trigger zones, hour and below. I repeat, trigger zones, hour and below. Trigger zones are where you'll want to enter the market. As I stated, I entered about 2 hours ago. But as long as your stop is in the correct place, you're good to go. Again, I'm at the high of the day. My entry is at 358. My stop is up at 361 and a quarter. From here, now we're going to analyze our intraday rules. Have we breached the previous day's high? Yes. Previous day's high is here. Now, where's the Asian range? Asian range, first 8 hours of the day, here. Now, leaving the Asian range, we've got London session. So now London session high and the New York session high are here. Both in the same area. So now, with this pattern playing out as it's doing, we can assume price will come back here and retest these levels. Now we can pull out our Fibonacci again. Fibonacci here off the Asian range. Swing high to swing low. If you look at where this high is being set, it's being set right on top of, or right below the 161.8. So this level is likely to be solidified as a high. From here, we can go into the 30-minute time frame. 30-minute time frame, of course, you see we're peaked out at the high. High of the day is being formed as we speak. Now from here, we go down into the 15-minute. My stop actually got clipped, so I'm actually re-enter here on the pound. Give me 1 second. All right, I'm back in there. So now we're at the high of the day being painted out now here on the pound USD. So if you're not in the pound USD yet, right now would be the perfect time to take that sell position. If you're not in the pound USD yet, right now would be the perfect time to take that position. Placing your stop again, 15 to 20 pips, no more than that above your entry, which is above the high of the day. Again, in this situation, we would not place our stop above the previous day's high, because that's where our entry's at. Our stop would go above the current day's high of the day here, which has just been painted right there. So now from here, we can take away this Fibonacci here. Now we're going to go from the swing low to the current swing high. Now, if you look at the Fibonacci, based on our analysis of the higher time frames, everything played out perfectly here off the Fibonacci, bringing us down there into the 161 or the 261 retracement. Everybody able to see that? And if you look at the time, it's now 9:30. Now, the New York session is in launch, in full activity mode, as well as the London session is now also in full activity mode for the next 45 minutes. This is when the New York session and the London session overlap between 8 and 10 a.m. So now our analysis is done here off the pound. So with that being said, we have a sell here on pound USD, a sell here on Aussie USD, and the long here off USD CAD. Any questions about those particular three trades that we've analyzed this morning? I'm holding the USD CAD, and I'm holding the pound USD and the Aussie USD throughout the day. Targets 50 pips. So if you're in these positions, go ahead and calculate 50 pips from your entry, and that's our target for the day. Now, if you reach that target and you do still decide to hold, that's when you'll place your stop in profit. Take partials. If you don't have a trade big enough to take partials, just put your stop in profit or take the trade off entirely. Okay, calculating pips, look at the right-hand side. Right-hand side over here, the numbers, say for instance, where we're at now is 1.2589. Every 10 digits is a pip. So from where we're at now, let me throw this up here. All right, if you look over here to the right, up here in the top corner, where I have 1.25908. If you count the last two digits, every 10 is one pip. So if we were looking for 50 pips from where price is now, 50 pips would be 1.264. 1.264 would be 50 pips, which is right here. So on a daily basis, this is really all you need, 50 pips, to have steady, consistent, profitable growth over time, moderate using your risk management. Any questions about any of the pairs that we currently analyzed? Here's Euro USD is well, yeah, as of right now, for today's session, the only trades I'm in is Aussie pound and USD CAD. Tomorrow we'll move on and do some more pairs. We'll do gold and continue the analysis off these current trades that we've done today. We'll also get into some more live binaries later on this week as well. All right, everybody good to go. I'm in the USD CAD long, Aussie USD short, and pound USD short as well. Again, target 50 pips for the day. Once you've achieved that 50 pips, if you don't take profit, put your stop loss in profit, and we'll pick up on this analysis tomorrow. This session was recorded, so I am going to be uploading this full session inside of the matrix.